And let's take a look at some of the evening trades. As soon as the market opened, the MNQ gap down, but it looked like it was going to just close the gap or go to the close of yesterday and start breaking back up. We had a nice strong bullish day yesterday, and I was looking for a continuation up. So my very first trade was after it had tested the close of yesterday. Let's take a look at it. So here we can see the close, this line. It gapped down and bounced right off of it. And I did not, and I should have probably taken the trade where I just bought right or as it bounces right back up, stop right here. I would have made 2-1 on that. But I waited for a 50% pullback, got long right there. Okay, and then it just came down and stopped me out, and I got out where I should have. I got out right down here where I should have gotten out. I wanted to get out right at that level, so that's right where I got out. And I didn't, chase it up higher, and that's another good thing. So I missed the lower price to get in there, and then got out when I was supposed to get out. Didn't chase it, so I was happy about that. I had some other trades. Now, right here was a risky trade, more risky than anything, because on my exponential charts and everything, it was trending down together. And when they were trending down together, over here in this area here, it was all trending down. You see the moving averages, everything's expanding down the other way. So I was going long at that point right here. Let's take a look at this right here. But I did get, I saw it coming back down on this side over here. So I got out with a tiny profit on that. And then I realized, let's just not try to buy this. So the next thing that I did literally was short. I don't know how. This was an accident. There's made a couple bucks. I hit the wrong. That would have been a loss. But you got to count your accidents. There's many times I counted accidents that went against me. So you count the accidents. If you make it an accident in your real money, you can't hide it. So yeah, we took that as a win. But the real winner was this short right here. Trying to go short right here, and my only problem with that is that I didn't hold it. I got out right here. I was pretty excited about it when it happened. If we zoom in real close, I think what I ended up doing was my stop was kind of like let's see here. We did one of these numbers here, and I think I just wanted to break even. I did candle by candle or something on it. And, I should have just moved my stop down to pivot by pivot. Something like I might have gotten stopped out right here, which was 2-1 rather than 3-1. But technically, this is one of those times when I just like to, look at this. I just want to put it on break even and see how far down it'll go. Get out maybe when it crosses like this. Let's see what would have happened if I had done that. I'm really curious now. I want to mark this area. Let's say if I waited for the triple moving average crossover to take place, where would that have been? You can't even count all those rewards I would have had. Look at that. Wow. 1, 2, 3, 4, 5, 6, 7 are return instead of 1. 7 times more. If I would have waited for the crossover. Now, there was a crossover right here a couple of times. Price had closed above the 20 EMA. Here, and here. But never did the moving averages follow right up over the top. I don't know if that's how I'm going to ever play it or have the guts to play it. But I just want to get it in my head that I do remember this trade. And I was thinking I could have played it a whole lot differently and at least got a 2 or 3 hour return on it had I not just got out real too quickly like I did. It was a good entry. I like the green bar consolidation. I like the green bar consolidation. Break down past the green bars ignored and just boom, it just went down. I wish I would have played that differently. I want to really emphasize the fact that I need to play that differently. I want to focus on this for a second here. Playing this differently right here. It really just did so well. It was a good call, a good read, just poorly executed. So let's, I didn't take any of those. I was just, you know how you get into a trade and it's going against you and you freeze and you just let it keep going against you and you're like, why am I not getting out of this? You're just frozen, you know. You go on tilt and you're psychologically frozen. Well, that's what happened with this not getting in it. It was going and going and going, and I've had some great opportunities to get in, man, and I was just frozen. So here's a beautiful setup right here. Man, this was a really, really good setup right there. How much would I have risked on it? I'm too concerned about my P&L. I'm too concerned about my P&L, and I didn't want to have any negative hit. I just had that hit up the top. I was still down. I was still red, even though I had that one winner right there. And look at that, another 3-hour return. You know, sometimes you get at the bottom here. Here's a great setup that just didn't go anywhere. You had green bars, testing the moving averages with the pintail, green bars ignored, continue it, and it just didn't keep going. You never know when that's going to happen. It could happen anywhere, any one of these places. And we've all gotten in the trend too late and gotten caught on that last one that just didn't go anywhere. And I just, you know, shame on me for not getting in these trades right here. Okay, let's take a look at some more trades we did do as it's developing here. Here is another setup where I was playing the down. It started going choppy. Let's look at the exponentials here. It started going choppy. Choppy, 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 choppy. Where we at? Well, I took this trade before it started going choppy. Yeah, let's take a look at this. I took this trade right here. Let's take a look at it over here on this one. Yeah, that was over here. So it was just starting to roll back down right here for the first time. It started to roll right here for the first time. It wasn't doing this choppy thing yet. So I was okay with trying to take this roll right here. And I did something with the fit. I love, and I'll show you a couple of more that I did that I love to do. If I notice a downtrend, I don't like the break down as much as I do the pull back. And we had this consolidation area right here. Here's the trade. Here's where I got long. And we noticed this consolidation area right here at the top level. And just when price came up, you know, and it looks like it swept that pivot level. And I just, as soon as it started going back down, I just jumped in. And I think I was looking at the 200 tick chart when that happened. Yeah, I was looking at this chart, the 200 tick chart. So right when it came back, these pintails, it came back up. I said, you know what? It's only like 4 ticks, 5 or 6 ticks of risk. So I got in it. And then as soon as it spiked down, I got out. It's a good thing I didn't try to hold it. I could have broke even on it, but I didn't. I just, as soon as it shot down, I got out right there, right there. Okay, so I like that. Low risk, and you get in and you scalp as much as you can. It just kept chopping around for a while. Like I said, chopping around sideways. I'm looking for my next trade here. And eventually we did take a trade when it looked like it was moving. Here's a break even. I tried the same thing where it came up, it's coming back up, and I wanted to short it off this spike, off this pivot here. There's 2 trades here. One I broke even on, and here's the second one. Right, I said, let me try it one more time. There's another one right there. I'm trying to look at where I got out. I got out down here, so I'm happy with that. I like that you keep your risk so low and you can break even. Very cheap trades, very low risk, very inexpensive cost, even if you're wrong. And then you get quadruple the amount if you're right. So the risk reward on those ideas where you let it come back up to Fibonacci levels, you let it come back up to support levels, and you keep your risk very, very, very low. So let's see if there was anything else. No, that's the last one. That's the last one. So those are in the books, and we're green just a teeny bit here. After taking that first trade loss, and I don't know if I'm going to do any overnight trades because I'd have to see what's going on here with the day chart. I'd have to make sure my risk is all managed. If I were to take a trade overnight thinking it's going to go long for whatever reason. See, this is looking like it wants to, right here, where we at. Let's go over here to the day chart. Or just everything. Yeah, this is the 15-minute. You can see this consolidation. Looks like it wants to break down. So I wouldn't be interested in going long. The question is, am I interested in shorting? And not necessarily with this big move yesterday. I don't want to short this. It broke out over the trend line. It could easily just come back and test 50% and shoot right back up. So I'm not interested in shorting. I'm not interested in going long with what it's doing at the moment. And I think it would be past my, let's see the 5-minute chart. Yeah, look at this rolling back down here. You see that's just rolling back down. So I'm not interested in going long. If it was developing in a bullish pattern, I would have to say, okay, but if I believed it was going back up, then I would measure my entry point down to the bottom. And I don't think I'd want to try to short it until it got back over the top of yesterday's close. So as long as it's a red day, like it is, now if it turned green and with a pintail, I would measure that out and see if my risk is okay. If it's too much risk, then I would just wait for another pivot level on a higher time chart. So if this were to go up, put in a pintail, turn green, and if this down here is too much risk for me to get in, then I would use this pivot level as my stop, depending on how much risk is in that trade right there. If the risk would allow that pintail. So in the overnight trade, I would take the trade based on this level here rather than the bottom. I like to use the bottom, but I might not have enough risk. It might be more than my risk tolerance. Like I did yesterday, we did that trade yesterday where we went to bed and we slept. It swept the overnight low, and I went to bed and, got up the next morning and we had a winner. And, but the risk tolerance and everything was just absolutely perfect. So, yeah, right here somewhere, right here, I went to bed. The market opened up or something. Let me just go through it because I might as well show you on this video here what happened because it really worked out really well. Yeah, 18, right over here somewhere, right here. The market opened. I can't find it right now, but it came out, it swept the pivot level of the close and went right back up, and I had plenty of room for my risk, and I used the bottom of that pivot as my risk, and it just went up and up and up and up all day today. So right here is where it went up all day today. So right in here is where the 18 was. Right here. Yeah, right there. This is where it opened up. It put in a bottom. Yeah, this came down pretty close to it, but it never, I went to bed. It never hit my stop loss. So again, market opened, very first candle. Yesterday's close was right here, so it went down into yesterday's close. It came right back up. This was a close test, but it didn't come down here, and I was able to stay in it. Woke up this morning and stayed in it during the daytime, and it had a 2R return on it. It was beautiful, beautiful. I went to bed, and I didn't care. My risk was measured. It was perfect risk, and I didn't even care if it would have hit me. This is different. This is more risk than I'm willing, and it's not going back up, and it's closed down below yesterday's close, and it looks like it's continuing. Why would I go long? Plus, it's probably too much risk. Too much. The lower it gets to the pivot, though, the risk is not as bad. But if it's trending down, you don't want to. Yeah, you don't want to. There is a pivot level right here, But like I said, it is below yesterday's close. And that's the negative part of this. If I look at the 15-minute chart, that looks like that wants to rotate down. This looks like it wants to keep rotating down. Hour chart, there's plenty of room. The moving averages are expanded quite a bit. It could roll down into this area down here and then turn around tomorrow, depending on what happens through the night. And that would be better for me to wait to see how far down it's going to go. Bouncing off this area right here looks good. 4-hour chart, it's pretty bullish, but there is too much room to come down, and I don't want to risk it overnight. Hit my target and just blindly jump in and gamble. It's too much of a gamble, too risky. This has plenty of room, open space to come down here, test this pivot level right here, fill in this gap right here. You know, we may have a red day tomorrow, then the next day could be green going back up. And if we get an evening open, that gives me a really good risk. If it comes back into, let's say the market closes red tomorrow, just to show you what I'm talking about here. If the market comes down and closes red down here, then the next day it gaps up and then comes down and sweeps the close and starts to head back up. That will be my trade zone. The bottom will be my risk. And we'll look for it to go back up over the top. So we don't know what this is going to do right now. Where would it bounce? Where's the bounce? There's a support level right here. And one little pivot right here on all the time charts. It looks like it already came down to that. So if this area is going to hold up tomorrow, if it keeps going up, and just say it stays in this area, and if it keeps going up, then what I could do here is measure my risk. Say it closes back up over there. How much risk is this? I'm very curious to see how much risk this is. Yeah, that's right in within my parameters. That's right. So that's a $240 risk if it closes back up over the top of this line, which is yesterday's close. And if it looks bullish on all the time charts, that will put it back up over the moving averages. And, you know, that would look good. And we'd look at the hour chart, see if everything looks like it's regaining strength, looking like it's curling back up. That might be an idea, but I have to wait for tomorrow for that. I don't think it's going to develop right now. I mean, anything could happen. We could get a strong candle right here and some consolidation before I go to bed, which would change my tune, but it's still below yesterday's close. I keep bringing that up because I don't know if I'm able to take the trade confidently, knowing that it's below yesterday's close. My strong rules are that I like to take the trade in the direction that it is on the whatever side of yesterday's close it is. If it's below it, then go short. If it's above it, then go long. So that's the only wrench in the sprocket here. Otherwise, there's my thinking. That's what we did tonight. That's what we did last night. That's what we did tonight. That's how we're trading. And we're able to get more serious and professional. So I'll see you in the next video. Peace.